Hello and welcome to Business Incorporated live on Channels Television. Here's what you should be watching right now. Global commodity prices could plunge to a 6-year low by 2026 as the World Bank warns of an expanding oil glut. And Zambia's inflation rate continues its downward trend, easing further this month, thanks to the sustained gains by the kwacha. And South Africa is launching a $135 million fund aimed at tackling one of its toughest challenges, unemployment. It's good to have you join us. I'm Laddie Williams, and we know the markets are moving along just fine right now. But let's get a check on oil prices. Yeah, still easing from earlier today, $64.47 a barrel, 0.69% down. There was a potential truce in a trade spat between the United States and China. As President Donald Trump lowered tariffs on China after a meeting with President Xi Jinping in South Korea. Trump agreed to reduce tariffs on China to 47% from 57% in a one-year deal in exchange for Beijing resuming U.S. soybean purchases, keeping rare earths exports, flowing and cracking down on the illicit trade of fentanyl. Investors see the announced agreement between China and the U.S. as more of a de-escalation of tension, and we're seeing the impacts on most of the markets right now. So we're seeing Brent there, $64.47 a barrel. WTI crude, 60 cents, holding on by a thread now, might go sub 60 again by tomorrow, but we'll see if that happens. 0.71% down for WTI. Let's get a check on the metals market now. We're seeing gold prices on the rose today, supported by a pullback in the dollar and an interest rate cut from the U.S. Federal Reserve. Although signs of progress in the U.S.-China trade talks that kept gains in check. There's a big 1.8% drop there, still below $4,000. That's for spot gold. The U.S. gold futures, that's holding on the $4,000 level. Spot silver, $47, still not far away from the $50 level. Platinum, 0.56% up. 1.6, palladium 1,460. Dollar index fell after hitting a 2-week high against rivals in the previous session, making gold less expensive for other currency holders. U.S. Central Bank cut interest rates by 0.25 points for the second time this year, bringing the benchmark overnight rate to a target range of about 3.75 to 4%. Fed Chair Jerome Powell said officials are struggling to reach a consensus about what lies ahead for monetary policy, and that financial markets should not assume another rate cut will happen at the end of the year. So I guess that's what's driving metals up at this point. Let's take it on to Africa now. Zambia's annual inflation rate eased further in October, supported by continued strength in the kwacha, offering relief to consumers and businesses struggling with rising prices over the past 2 years. According to the Zambia Statistics Agency, that's ZamStats, consumer prices rose 11.9% year-on-year in October, down from 12.3% in September, marking the lowest inflation level since August 2023. The moderation reflects the impact of a stronger local currency, which has helped reduce import costs and ease inflationary pressures across the sectors. The Zambian kwacha, that's appreciated steadily in recent months, buoyed by higher copper export earnings, improved investor confidence, and stronger foreign exchange inflows. The local currency recently traded at its strongest level since early 2024, driven by global demand for copper and Zambia's progress on debt restructuring efforts there, helping their inflation ease. And in South Africa, they've announced plans to establish a $135 million fund aimed at reducing the country's persistently high unemployment rate. The initiative, unveiled by the Department of Employment and Labor, seeks to support job creation, entrepreneurship, and skills development, particularly among the youth and women. The new fund will finance small and medium-sized enterprises, provide training programs, and back community-based employment projects across key sectors such as agriculture, manufacturing, digital technology. Authorities say the move is part of broader efforts to stimulate inclusive economic growth and address structural challenges that have left millions jobless. South Africa's official unemployment rate currently stands at around 32%, one of the highest globally. The government hopes the fund will help bridge the gap between job seekers and available opportunities while empowering businesses to expand their workforce. And the government of the Republic of Mali has officially revoked more than 90 mining exploration permits under a sweeping regulatory overhaul, marking one of the most significant interventions in the country's extractive sector in recent years. According to a decree signed on 13th of October 2025 by the mines industry under Amadou Keita, all rights conferred by the cancelled exploration permits are released, and the licensed areas are now open for reallocation. The permits span exploration for gold, iron ore, bauxite, uranium, rare earths, and other minerals, and cover licenses issued between 2015 and 2022. Under the new legal framework, the 2023 Mining Code and its accompanying local content law grant the states greater participation in mining projects, increase royalty, tax burdens, and aim to leverage minerals for domestic development. All right, let's get a quick check now what's playing out with the markets. Starting on the African continent, we see it's mostly negative sentiment there. The NGX kicking off proceedings there in the red, just marginally down 0.01%. That could change before the end of trade today. We see the Johannesburg Stock Exchange also in the red, but the NGX opened in negative territory with the All-Share Index down about 1 basis point. There was 2 earlier. Decliners led by Chams, Omatech, both down by 897 basis points. Alongside losses with UACM, Mansab and WAPIC. On the flip side, there's renewed buy interest in some previously beaten down names like Sterling, UBA, Axis Core, and Custodian. They're all posting gains, while Asset Savings continues its rally up 930 basis points. In corporate news, Aridel, Seplat, they both declared interim dividends through market reactions have been mixed to that. Aridel trades below its open price despite a 10 naira per share payout, while Seplat is edging higher after announcing a combined dividend of about $7.50. Meanwhile, Gary dominates activity by value, accounting for 73% of total market turnover, with trades worth about 8.7 billion and Asset Savings leading volume with 68 million units traded. So that's the picture right there on the NGX. Let's flip over to other parts of the African continent that we cover now. Let's talk about EGX 30. That's 0.25% up, 38,323 points. And the Nairobi Stock Exchange closing yesterday, just mildly positive there by 1 basis point, 183 for the Nairobi index there. And to the Middle Eastern markets, we see for Dubai, we see the sentiment there is mixed in the UAE, 0.08%, that's for the Dubai index, while on the flip side, the Abu Dhabi index, that's up 0.20%, 10,182 points. Saudi, Qatar, most as positive sentiment right there. The Tadawul and the Qatari index, just marginal gains there. We'll see if that holds to the close of trade today. Let's take it on to the U.S. now. U.S. stock futures moved higher marginally as the U.S. President Donald Trump and China's President Xi Jinping concluded their meeting, and we did hear Trump say that meeting was amazing, but we're not seeing that amazingness right there for the futures market. But the Nasdaq, that's up 0.55%, a better move there, 23,958 points. We've had big tech earnings release. The Federal Reserve, Federal Reserve cutting interest rates by about 25 basis points, but still forward guidance there weighing on the markets at this point. So I guess that's what we're seeing. Gold even recovering and doing better. Let's take it on to Asian markets now. Let's see what's playing out with Asia. We see for the close, Nikkei about 4 basis points to close in the green, still at all-time highs. Hang Seng Index, that was down 0.24%. Chinese and Hong Kong markets, the dip today as investors assess the first in-person meeting between President Donald Trump and China's president. So that's what's the driving sentiment there. Those two big names speaking there. Let's flip over to what's playing out with other markets in Asia, like the Nifty. That closes in the red right there, 0.63%, 25,889 points. That's for what's playing out in Asia. All right, let's circle back to the commodities market now. We see soybean, one of Nigeria's key agricultural commodities, is witnessing a significant price surge both locally and globally. Domestically, prices have jumped by over 21%, while in the international market, soybeans are trading at a 15-month high, driven by renewed global demand and trade optimism. Well, join us now to unpack this. We have Amira Yakubu. She's an analyst with financial derivatives company. Great to have you, Amira. So talk to us about the main drivers behind the recent surge in soybean prices, and do you expect this uptrend to continue, in the short term, or could price ease as supply adjusts?
I didn't get your question clear.
So I'm asking, what are the main drivers of the soybean price rising domestically and in the global market? Do you see the uptrend continuing?
Okay. So in case of prices of soybeans rising, I see it rising in the near term. This is because of some factors that are currently happening both in the domestic market and the global market. In the domestic market, we have seen a case where there are issues revolving around supply constraint, production risks, and also the strong demand in the market. So in terms of supply constraints, the high input costs, such as that of fertilizers and also the logistics costs. So these are things that has increased the prices of soybeans. So when we look at key producing states like Kaduna and Benue, so they face logistic costs, which has increased by over 30% year on year, and also the ongoing insecurity issues in the state. So this has made the farming operations very constrained. So in terms of global prices, we've recently seen that the prices have reached a 15-month high, and this is going to affect the Nigerian market also. We also saw where the agreement between the US and China, where the US currently reduced the tariff with China from 57% to 47%. So this is a reduction from 20% before to 10%. So we should have in mind that the US is the world's largest exporter of soybeans, and China is the world's largest importer of soybeans. So it depends on the production capacity of the US. So if China demands more of soybeans from the US, we can see that it will affect the Nigerian market. So prices are basically going to still be elevated. Issues that are going around.
All right, and definitely we'll keep tracking those issues. Thank you so much, Amira Yakubu, analyst, financial derivatives company. Thank you for coming on today. All right, let's head over to Berlin now for markets with Lars. Global investors continue to keep a close eye on corporate earnings, with company results shaping market sentiment across, Europe and beyond. Among the top movers this week are the major automakers, names like Volkswagen, Mercedes-Benz. Their latest figures have, stirred quite a reaction right there in Europe. Let's bring in Lars Holter now. Hello, Lars. Great to have you.
Good being with you, Larry.
Yeah, what's happening with the markets right there?
Yeah, Larry, sometimes you really have to wonder, what does the market need to get moving? We're flat again in Frankfurt, with the DAX currently up about 0.1%. And that's despite the fact that we're having tons of numbers out, corporate numbers. Then, of course, we'll also get the ECB interest rate decision in just a few moments. Then again, it seems pretty clear that the central bank will leave interest rates untouched again. So maybe there's not too much news in that bit, of course. But still, interest rate decision days always come with a lot of talk, with statements, with analysis. So maybe we're getting the indices to move a bit more once we have that out. But right now, for the umpteenth day in a row, really, Ladi, there is really not much movement in markets here in Germany.
Right, and I guess that might give investors in Europe some time to adjust their portfolios going forward. But generally, it seems corporate numbers are dominating market these days. And these days the automakers are making the headlines. So what can you tell us about this?
Yeah, well, we just heard from Volkswagen actually earlier this morning, and they're looking at €1 billion loss for the quarter, and it comes on top of Mercedes-Benz, who we heard from yesterday. They reported profit down 30% over the past year, and looking at the first 9 months of the year, profit down actually a full 50% over the same period last year. Car sales are down. The outlook is weak, and there are a number of reasons. In some cases, they have failed. These companies have failed really to convert parts of their fleet to electric and have lost a segment of the population there. But then most problematic of all, Mercedes and Volkswagen and the other car makers as well, those we haven't seen latest numbers from yet, they all have recently, of course, lost market share on their biggest export markets. That's the United States and China. They're losing the Chinese market as companies there have become a lot stronger, producing the products that Chinese customers actually want. And meanwhile, the US has, of course, put tariffs on German cars, making those more expensive there and also thus less attractive.
What can, Volkswagen and Mercedes-Benz, do to drive themselves out of the current weakness?
Yeah, they have limited options, unfortunately. Mercedes-Benz in particular, management says that for now they want to focus on cutting costs, production costs as well as overhead, supposed to be cut down by 10% within the next 2 years. Of course, that includes job cuts, but there are other ways they want to lower expenses, including in materials as well. And then they do have a two-pronged approach to the problems in those key export markets, and maybe that is the more important part of their strategy. They will shift more production to the United States, to the plant there, to get around those U.S. tariffs, and they're working closely with a Chinese car company specializing in self-driving software, Momenta it's called, to make their cars more competitive, specifically on the Chinese market. However, none of this will, of course, happen quickly. These are, as management has also pointed out, multi-year tasks.
All right, thank you so much, Lars. We'll keep tracking what's playing out in the auto industry right there in Europe. Thank you so much.
Thank you, Ladi.
All right, let's get a check on what's playing out in the crypto market. Now, we did see, red on the screen right there, the crypto space there with Bitcoin giving up some gains, 3.91%, losing the 110,000 level. That's for Bitcoin, Ethereum, 3,800, moving farther away from $4,000. XRP, a big dump, 6.05% down. Solana losing $200. BNB hanging on to $1,000 by a thread there, 1.62% down. So it's blood red right there in the crypto market. Let's get some top stories now. Western Union, they've announced a major move into digital assets through a stablecoin project on Solana, marking a significant shift in financial services, as confirmed by the company. The stablecoin initiative highlights Western Union's commitment to advancing financial technology, potentially reducing remittance costs and increasing efficiency in global money transfers. They also see CETIC, a leading smart contract auditing firm, uncovered a major exploit on the Base blockchain when unverified smart contract at address there siphoned about 55 wrapped Ethereum. That's worth about $220,000 from a victim. The weakness was caused by the function that was not properly controlled in terms of access, and noted by CETIC. This vulnerability enabled illegal transfer from calls to empty the wallet of the victim. Now we see Tron. They're making headlines once again as it achieves a new all-time high in both daily and active addresses and transaction volume. According to latest data, Tron has surpassed previous records, signaling a surge in on-chain activity that reflects strong user interest and growing adoption. This spike in network activity could mark, the beginning of a new growth phase for Tron, as higher engagement often precedes major price movement in the crypto market. Projects with consistent increases in usage, they tend to attract more attention from both retail and institutional investors. Sort of the top headlines right there in the crypto space. But let's turn now to what's playing out in the crypto space in Nigeria. Is buzzing again. We did hear the Director General of the Securities and Exchange Commission, Dr. Omotini Agama, revealing that over $50 billion worth of cryptocurrency transactions flow through the country between July 2023 and June 2024. Let's talk to Rumi Ofi now to bring us up to speed with this. Hello, Rumi.
Larry.
Yeah, so Rumi, That's a huge sum right there. The revelation by the SEC DG. But I guess it's expected. A lot of Nigerians trade crypto, and they've been trading crypto for a while.
Yes, a lot of Nigerians, particularly, actually love crypto, and the way it is now is appearing that irrespective of what the regulators or government are doing, the people are actually resilient in doing what they have to do, because that is right now the future of money is digital. So we are not in any way trying to look back. In our local palace, we need to carry last. So a lot of young people are getting involved, and I think the best thing to do right now is to put structures in place, make very huge plan for an educational infrastructure, so that these young people that most likely are susceptible to getting into gambling and all of these other vices could also get involved in crypto to build a career around either Web3 or blockchain to get it working, because the world is actually looking at us to lead Africa right about now.
Right. We did hear the SEC DG also, try to make a case for Nigeria's stock market. Imagine that volume, flowing into Nigeria's stock market, or part of that volume. What do you think, or do you think, some of our youths are getting more interested in trading on Nigeria's stock market, or do they still prefer, the blockchain trades, or is it time for the internet capital market?
Yeah, so the Nigerian youths are most likely now not interested in the capital market. I really, when I read that from the DG, so I saw where his bias coming from. So it's heavily tilted towards the traditional financial system, but everything have actually changed right now. People don't have interest in the traditional financial system. So, for example, if I buy stock for now, depending on the company, though not all, some of them don't have very good history with all of that. A couple of companies that people have bought stock for years, it turned out to be nothing in return. So imagine using that energy to get Bitcoin or some other digital asset that have actually created infrastructure and have proven themselves beyond reasonable doubt over the years. So and the returns have come up. It's not like trying to get rich quick, but they are seeing the reality that this is the future, where most of the companies in the US and financial institutions are actually getting Bitcoin on their reserve. It's only a telltale signal that this is where the world is headed, and there's no point going to the traditional or the old system of doing things.
Right, and talking about the old system, Rume, we see the all share index for Nigeria stock market, that's up about 50% this year, so far. So we're seeing gains in that market. Some of the stocks listed there up over 100%, so far. So they're doing pretty well, if you're looking at Nigeria's stock market. But do you think it's about getting the stocks on the blockchain so that we can easily trade it? Is that what's holding youth back?
No, like I was talking about something earlier today. A lot of these young people have actually devised means to do things faster. Well, we call them Gen Zs, and they look at the possible faster way to achieve goals. I was telling someone earlier today as well that the jobs that are going to be available in the next 10-20 years are still being built right now. So that is why if you check, a couple of companies are tokenizing their asset, putting it on the blockchain, so that exchange platforms like crypto exchange platform can put it faster on their platform. So someone could just hold their app and buy some of those assets, those tokenized assets. So more like companies that usually have shares, but this time they put it into the blockchain and create a token around it, so it becomes easy. People just look for things that are easy to solve their day-to-day problem, rather than go to have a stockbroker do all of this, get all of this documentation and all of that. So I think it's a welcome development, and I think all of these companies here in Nigeria should look towards that innovative tech and make sure things work in all of that aspect.
All right, and T+2 is coming November. Very soon we're able to settle trades in Nigeria stock market in 2 days. That's coming, soon. So hopefully it gets maybe to one day, that maybe that will, get more youths involved. Well, how you seen the market sentiment so far? It's red on the streets right now.
Yeah, so the market is responding to a lot of things, and one thing I would say is that we're closing out on the bottom, and when it's that way, a lot of things happen. A lot of panic. When we see a lot of a huge panic, that's we're ending up to seeing the bottom of the ups and of the downs for now. You've seen that we've tested the flash crash took us to about 100k. CME gap was filled yesterday by 109 that you're about. We're still hovering around 108 right now. So I think since there's a huge fear, it's another telltale sign that we're about leaving the bottom. And after that, we'll see some very good green candles up.
Right. Well, I guess we'll keep tracking the fear greed index, at this point. Thank you so much. Rumi Ofi, financial market analyst. Thank you.
Thank you very much, Ladi.
And that's it for the markets today. That's most of the markets that we track. Definitely we'll give you more updates. That's for the local bonds on the news at 10. We'll see how it closes. Maybe in the green, maybe in the red. I'm Ladi Williams from the team right here at Channels HQ. It's bye for now.